Hello, and welcome back to Insurance World TV, your premier insurance education channel. Here, we simplify complex topics to help you make informed decisions. In today's video, we'll delve into the fascinating subject of the application of insurance practices by early African societies in their daily lives. Most of the documented history surrounding the development of insurance tends to focus on Europe and the Americas. But what about Africa? Did our ancestors understand and practice forms of insurance? These are thought-provoking questions whose answers may lie in forgotten historical records, or they may be yet to be fully discovered. In my opinion, there are certain practices in traditional African societies that could be classified as early forms of insurance if we closely examine their underlying intentions and the outcomes they achieved. Let's explore a few of these examples. Example 1. The concept of friendly societies. The early history of insurance mentions the formation of friendly or mutual societies. According to Britannica.com, these were voluntary associations formed by individuals with the goal of protecting their members through mutual assistance, particularly in times of distress, such as illness, death, or old age. This aligns closely with modern insurance concepts such as medical insurance for illness, life assurance for death, and pensions for old age. In early Kenyan societies, the family structure was deeply interconnected, often organized around extended families. There was an unwritten rule that family members would always take care of their own. For instance, if a nuclear family lost both parents, the extended family would step in, with another family adopting the orphan children. This ensured that the children were taken care of, almost as if their parents were still alive. In a way, this resembles life assurance, where the extended family functioned as a safety net for the children. Of course, over time, the outcomes of these arrangements varied, influenced by factors such as modernization and moral changes within society. However, the fundamental intention of these practices was rooted in a noble cause, as envisioned by our ancestors. Example 2. Synergy in African societies. The collaborative nature of African communities was another critical aspect of their societal structure. People would pool their resources together to uplift each other economically. This was not limited to monetary contributions. It extended to cooperation in building houses, cultivating fields, caring for children, herding livestock, and even taking turns to guard the community at night. When a member of the society suffered a misfortune, such as losing their home to a flood or a fire, the community would come together to help rebuild the damaged property. This practice can be seen as a form of property insurance, where many contributed resources to restore one person to their prior state after a loss. In this scenario, the premium was the individual's active participation in the community and the pooling of resources for others when needed. Example 3. Property ownership and protection of livestock. An interesting practice related to property protection, particularly concerning livestock, also demonstrates early insurance-like thinking. In many African societies, a person who owned a large number of cattle, goats, or chickens would send part of their herd to a family member or a friend living far away. The recipient would care for these animals temporarily. This practice served several purposes. It helped manage overcrowding, ensuring that feeding grounds were not depleted, but more importantly, it protected the livestock owner from total loss. In the event of a disaster, such as a plague or cattle rustling, that affected the owner's primary herd, they could recall the livestock sent away and begin rebuilding. This, in essence, mirrors modern livestock insurance. The temporary caretaker benefited by using the livestock's products, and sometimes, as a rule, they were allowed to keep one offspring for their efforts. This arrangement was a practical and innovative way to mitigate risk and ensure recovery after a calamity. Example 4. Mixed cropping as a form of income protection. Another practice, particularly in agriculture, was the tradition of mixed cropping, such as planting maize and beans together. This method acted as a safeguard. If one crop failed, the family could still rely on the other for food. In a way, this is similar to family income protection, where diversification ensures that even if the primary source of income is compromised, there is a fallback option to maintain stability. This principle is still reflected in certain life assurance policies today. We further this topic by discussing additional African practices that could be viewed as early forms of insurance based on their intent and outcomes. These include 1. Traditional burial societies. In many African communities, there existed burial societies where individuals contributed to a communal fund or pool to cover funeral expenses. These societies were formed voluntarily, with members making regular contributions. In the event of a death within the society, funds were dispersed to ensure that the deceased received a proper burial without placing a heavy financial burden on the family. This is similar to modern-day funeral insurance, which covers funeral costs and related expenses. 2. Communal harvest sharing. In agrarian societies, there was a practice of communal grain reserves, where a portion of each family's harvest was stored collectively for use during periods of famine or poor crop yields. This ensured that even when one family's crops failed, they could still access food from the communal reserves. This resembles crop or agricultural insurance, where the risk of a bad harvest is spread across multiple individuals, reducing the impact on any single farmer. 3. Bride wealth and dowry practices. While traditionally seen as a cultural or social practice, the bride wealth, or dowry, system had some protective financial mechanisms embedded within it. For example, cattle or money transferred during a marriage could be used as financial security or wealth preservation. In case of divorce or the untimely death of a spouse, the bride wealth could sometimes be returned, providing financial relief to the affected family. In some ways, this acted as a form of wealth protection or life insurance, ensuring that a family could regain economic stability after a significant life event. 4. Rotating savings and credit associations, Rosas. Rosas, known by various local names like merry-go-rounds in Kenya or tontines in West Africa, were widespread across Africa. Members of a community contributed a fixed sum of money at regular intervals, and each time, one member would receive the entire pot of money. This system helped individuals save and access lump sums for important life events, like paying for weddings, medical expenses, or building homes. It was a form of pooled risk, where the community helped ensure that all participants could access funds when they needed them. Rosas were an early form of savings insurance and financial planning. 5. Firebreak systems for property protection. In certain pastoral and farming communities, especially those in drier regions, people created firebreaks to protect property from the spread of wildfires. This practice involved clearing vegetation around homes and fields, reducing the likelihood of fires spreading uncontrollably. While not a formal insurance policy, it was a community-based risk management strategy aimed at reducing the potential loss of property from natural disasters like wildfires. It mirrors the modern concept of risk mitigation in property insurance. 6. Social networks and reciprocal labor. Many African societies had intricate systems of reciprocal labor. For instance, during harvest seasons or construction projects, families and neighbors would come together to work on each other's farms or homes. This work-sharing arrangement ensured that if someone fell ill, had a family emergency, or faced a labor shortage, they could count on the community to step in and provide assistance. This collective security, ensuring that vital tasks were completed even in times of personal hardship, is akin to a social insurance network. 7. Traditional health and healing systems. Many communities had traditional healers or herbalists, and these healers operated on a system of goodwill and reciprocity rather than direct payment. People who could not afford payment were often treated with the understanding that they or their family would assist the healer in some other way later on. In some cases, communities would pool resources to support the healer or pay for treatment when one of their members fell ill. This collective approach to healthcare can be seen as an early form of medical insurance, where the community absorbed the healthcare costs of its members. 8. Communal livestock grazing systems. In regions where pastoralism was the primary livelihood, herders often practiced communal grazing and watering of livestock. During drought or lean seasons, Families pooled their resources to maintain shared access to grazing land and water, ensuring that even those with fewer animals or resources were not left vulnerable. In case of a loss of livestock due to disease or theft, there were informal systems where neighbors or relatives might gift animals to the affected party, helping them rebuild their herd. This practice can be considered similar to livestock insurance, where the community absorbs and redistributes losses. 9. Hunting and food redistribution systems. In some hunter-gatherer societies, successful hunters were expected to share their catch with the community, particularly with those who were elderly, sick, or unable to hunt. This practice ensured that everyone, regardless of their ability to hunt, had access to food. It was a way of protecting the most vulnerable members of society from starvation, acting as a form of social security or income protection. 10. Traditional fines and compensation. Restorative justice. African communities had systems of justice that focused on restoring harmony rather than punishment. When a person committed an offense or caused harm, they were often required to pay compensation in the form of livestock, grain, or money to the injured party or their family. These fines acted as a form of financial redress, protecting the injured party from suffering prolonged economic consequences. This practice was a form of liability insurance, as it ensured that people were compensated for losses resulting from the actions of others. These practices demonstrate the deeply ingrained sense of communal responsibility, resource sharing, and risk management that permeated African societies. While they may not fit the modern definition of insurance, they performed similar functions, protecting individuals and families from financial hardship and ensuring that society as a whole remained resilient in the face of crises. These are just a few examples of how traditional African societies incorporated practices that can be likened to modern insurance concepts. As I continue my research, I hope to uncover more examples of these ingenious systems. If you have any thoughts or additional examples that you think included, feel free to share them in the comments below. We'd love to hear your insights and mention them in the next video. And don't forget to subscribe and click the notification bell so you won't miss more content like this. Thank you for watching, and until next time, stay informed and stay insured.